Zimbabwe's bold leap to stabilize economy, launch of gold-backed ZiG currency by Satori News. The journey toward economic stability in Zimbabwe takes a significant turn with the introduction of the gold-backed ZiG currency, which stands for Zimbabwe Gold. The new currency emerged as a response to the dire economic circumstances following the hyperinflation that has repeatedly collapsed the value of the nation's legal tender. This strategic move towards the ZiG currency began in April, as the nation yearns for financial sovereignty and trust. Zimbabwe's economic scenario presents a tumultuous backdrop marked by the rapid depreciation of the resurrected Zimbabwean dollar in 2019. The local currency spiraled into decline, losing 80% of its value amidst daily trading against the mighty US dollar. This led to a system where the majority of transactions within Zimbabwe were conducted in dollars for essential needs, a clear reflection of low confidence in the local currency. The ZiG made its debut on April 8th at a trading rate of 13.56 to the dollar. The new currency sparked a wave of system updates across banks, mobile money platforms, and retailers to accommodate the emerging financial ecosystem. Holders of Zimbabwe dollar accounts had their savings converted to ZiG, and the currency's inception prompted the Zimbabwe Stock Exchange to rebase listed securities. In an important administrative step, the International Organization for Standardization assigned the currency code ZWG to the ZiG, in line with international standards and country codes, paving the way for broader recognition. At its core, the ZiG currency enjoys the backing of substantial reserves, $100 million in cash and 2,522 kilograms of gold valued at approximately $185 million. This backing is the foundation of the currency's bid for stability and credibility. New ZiG banknotes were issued at the end of April, accompanied by a central bank promotional campaign. To instigate the use of ZiG, the government has enacted policies mandating companies to fulfill half their tax liabilities with the new currency, and in some cases, accept it exclusively. Resistance to the currency is countered with fines as government services pivot towards ZiG transactions. This shift has seen the prevalence of dollar transactions fall from 85% to 70%, an initial sign of traction for the ZiG. While it remains a formidable task to establish trust in a currency shadowed by the failure of its predecessors, early indications hint at a slow acceptance. Official reports link the ZiG's introduction to a moderation in price hikes, though more data is needed for a definitive analysis. The country's persistent economic turmoil, characterized by crises, inflation, and socioeconomic struggles, has heightened the stakes for the ZiG's success. Zimbabwe is aware that past currency resurrections faltered when they became tools for unchecked government spending. To this end, Central Bank Governor John Mushayavanhu emphasizes a disciplined approach, ensuring no repeat of historical missteps. It is a critical moment for Zimbabwe, and as the newly established ZiG seeks to navigate the complexities of currency trust and economic revitalization, the world watches, taking note of what could be a financial renaissance for the nation or another chapter in its challenging economic narrative. Thank you for choosing Satori News.